Dirty dealings, corporate battles, consumer woes. This is Evening 5. The High Court has granted ex-PM Datuk Sri Najib and former Treasury Sec General Tan Sri Muhammad Irwan Seriga Abdullah a discharge not amounting to an acquittal in their criminal trial regarding International Petroleum Investment Co. or IPIC. High Court Judge Datuk Muhammad Jamil Hussein on Wednesday discharged the two of all 6 charges. Both men, however, can be recharged in the future. Muhammad Jamil said there was an extreme delay in the case due to the prosecution's failure to provide the defence with crucial documents, even when the 2 men were charged in 2018. The 2 men are charged with 6 counts of criminal breach of trust of over 6.6 billion ringgit of government funds meant for development projects, but the funds were misappropriated and diverted to IPIC in order to repay 1MDB debt. The entire debate on DNAA came about after prolonged delays in the trial due to the prosecution's delay in handing over hundreds of documents to the defence to mount its case against the charges. Najib and Irwan were charged in 2018, but the trial has yet to begin 6 years on. With his decision, Najib has 1 court case left on his plate for now. He still has to enter his defence in the 1MDB Tanore trial, as well as his money laundering trial involving SRC International, set to start in April 2025. Meanwhile, Irwan still has a pending civil case related to 1MDB. AMMB Holdings sharply raised its dividend payout after reporting a 7% year-on-year rise in its second quarter FY 2025 net profit to 500.6 million as a result of interest income growth. Net income edged up 6.8% year-on-year and Islamic banking income gained 41%, while non-interest income such as fees and commissions fell 24%. The bank declared a higher interim dividend of 10.3 cents per share compared with 6 cents for the same period last year. Moving into the second half, AMMB said it will focus on growing its loan book, particularly the small and medium enterprise as well as middle-sized corporate segments, while repositioning its retail banking segment. The group will also build and expand its wealth management propositions as well as developing efficient supply chain solutions for customers. For the first half, net profit was up 18% year-on-year to 1 billion, while net interest income rose 8.3%, offsetting a 7.2% decline in other operating income, while allowances for impairment on loans, advances and financing were down sharply. AMMB Group Chief Executive Officer Jamie Ling said that in line with Malaysia's improving economic prospects, it remains optimistic about its FY 2025 prospects. The bank's net interest margin improved by 14 BPS to 1.93 as at the end of September. Gross loans, advances and financing grew 2.8%, mainly led by business banking. In terms of asset quality, gross impaired loans were stable at 1.67%, while a loan loss coverage stood at 102.1%, including regulatory reserves. The Common Equity Tier 1 capital ratio, a typical measure of a bank's capital strength, came in at 15.29%. FGV Holdings, Malaysia's largest producer of palm oil by volume, nearly tripled its net profit for its third quarter thanks to higher output and prices that may stay high for the rest of 2024. Net profit for the quarter came in at 87.16 million as revenue surged 26% year-on-year to 6.18 billion ringgit. No dividend was declared for the quarter. The average crude palm oil price achieved was up 2.6% year-on-year to 3,980 ringgit per tonne, while fresh fruit bunch production grew 20% to 1.2 million tonnes. While output peaked during the third quarter, prices remained elevated amid rising crude oil prices and concerns over reduced output, according to FGV. As a result, the plantation division is intensifying its yield enhancement efforts, focusing on efficient crop recovery, loose fruit collection and estate mechanization. The sugar division reported smaller losses in the January to September period thanks to higher overall average selling prices, increased sales volume and incentives received for certain packed sugar sold in the domestic market, as well as overall better capacity utilization. Chief Executive Officer Fahruniam Ohman said that going forward, FGV's priorities are focused on revenue opportunities and operational efficiency. Bousted Heavy Industries Corp is selling its 51% stake in Contraves Advanced Devices to its JV partner in the firm, German arms maker Rheinmetall, for 54 million ringgit cash. The disposal of the stake will result in a loss of 14.82 million to BHIC. CAD is a former subcontractor for the Littoral Combat Ship project, which has been fraught with delays and cost overruns. According to BHIC's boss filing, the negotiations for the deal began after end December 2023, following BHIC's loss of joint control in CAD. However, BHIC did not divulge the details of how it lost joint control of the JV. The group said that the disposal reflects BHIC's strategic realignment, allowing the group to exit the LCS business, which had become non-core, and redirect resources towards growth-centric defence and commercial opportunities. The 54 million price tag, however, is at a 20.9% discount to BHIC's equity share of CAD's unaudited net assets of 68.3 million as at end December 2023. BHIC has earmarked 31.81 million of the proceeds for future viable investment in the aerospace, marine, weapons and combat system sectors, as well as the commercial segment. Another 21.67 million in proceeds is to be reserved for working capital. The disposal is expected to be completed in the first quarter of 2025. Air fragrance maker Vanzo Holdings has launched the prospectus for its ACE market initial public offering that may raise up to 21 million ringgit to expand retail presence and marketing activities. The IPO, priced at 15 cents per share, involves the issuance of 93.35 million new shares and an offer for sale of 46.68 million existing shares, according to the prospectus launched today. The IPO application closes on December 4th, with Vanzo scheduled to go public on December 17th. Vanzo mainly designs and sells car air fragrance and related products, ranging from air fresheners to scented candles to supermarkets and convenience stores. The company currently has 6 retail kiosks, with 5 located in shopping malls in Klang Valley and 1 in Kuching, Sarawak. Managing Director Alan Wong Liangze said that the listing will provide a larger platform for Vanzo for fundraising and access to capital for the company's growth plans. Vanzo earmarked 6.6 million for the expansion that will involve 4 new retail kiosks aimed to increase its brand visibility and customer base. The company will use 3 million for repayment of bank borrowings and the balance for the working capital and listing-related expenses.